This is for the first time in this COVID bull market or the post-COVID bull market, we have seen a sizable correction, 10% plus on the index, 20% plus for 20% plus on in mid and small cap stocks. Do you think this is a much awaited correction and geopolitics and Fed is just a reason?
Nikunj, I would probably agree with that, and as I have often said that real risks are not known, and I think something similar has played out. And if you recall, even in our last conversation, we had discussed that markets are expensive and one should have moderate expectations and invest only with the long-term view and be prepared for volatility. So I think the reason for volatility, of course, was not anticipated. I would feel that this is a reasonable correction, good correction, but still I would say it's not time to be over optimistic on the markets. But it's still time to be cautious, time to moderate expectations. And I'm sure you would have observed that companies that had weak earnings or massive earnings expectations into the futures, they have been impacted more. And this is how over time, excesses also get driven out of the markets. Yes.
Undoubtedly, and that's the experience of March, April, May, June 20. SIP investors today still have positive return on a 3-year, 5-year, 7-year, 10-year basis and reasonably good double-digit positive return. But in March, April, May, June 20, 3 years returns were negative, 5 years return were lower than savings bank account return, and 10-year returns were down 50% to become comparable to bank fixed deposit return. People who did not do anything and continued their SIP today are enjoying the fruits of double-digit return. People who panicked and ended up stopping their SIP lost a great opportunity to make money. People who panicked and redeemed their SIPs converted their notional loss into actual loss. And the smartest one were those guys who topped up their SIP when SIP returns were negative. So my recommendation is that please follow the dharma of asset allocation.
One thing about being an investor, and I think it's been true for the last 20, 30, maybe 100 years also, is you should never panic and you should never become euphoric. So I think when you said if retail investors are panicked, then maybe they are not investors, they are traders. And I think retail trading is a very high intensity job. Very few people really make the cut. But I think if you are a trader, you might swing from one end to the other. But as an investor, if you are a retail investor, I think you need to keep in mind that this is India's long-term story, what are the drivers of that, and also keep your cool. Don't get panicky, because panic anyway is going to cost you. Now maybe the market will continue to fall, maybe there will be volatility, but for a long-term investor, the volatility should be your friend and not your enemy, while for a trader, the volatility can be your enemy if you are not really on the cutting edge.